Bitcoin closed a weekly candle below this fair value gap. That is clearly a bearish sign. Nasdaq is reacting down. The dangerous thing right now is that Nasdaq and S&P has a divergence between their highs. Hi everyone, warmly welcome to this week's market outlook. This is the place where we'll leave out the emotions and focus on logics. We're gonna have a look at Bitcoin, Nasdaq and S&P 500 as usual, but let's start with the news calendar. Well, it's a new week and a new month, which increases the volatility in the beginning. We have a lot of news here. Non-farm employment change on Thursday, and then non-farm employment change on Friday. We also have some red folders here on Wednesday. There are a lot of news drivers this week. The main one you should focus on and be careful with is 2:30 p.m. This is Swedish time on Friday. Be careful with that. Other than that, you can of course keep an eye open on these other red folders this week, of course. But from my experience, this is the event that will create most amount of volatility in the market. Let's check the earnings calendar. Monday, nothing special. Tuesday, Wednesday, let's check again. Nothing special here, in my opinion. The fear and greed index for S&P 500 is still in greed, and for the crypto market, we just touched fear. And we will go through the charts of Bitcoin, Nasdaq, S&P 500 soon, but let's go through the macro view first. When it comes to the liquidation index in Bitcoin, we can see a lot of longs have been liquidated. Generally, that means that we could build a pivot point or a low in the market to then aim for higher levels. But it's important to respect the charts and also stick to the trend right now. And I will show you what the trend is right now and what I'm aiming for, etc. And the daily exchange volume is a really important chart to keep an eye on. And I've been telling you that I would like to see a higher high above this level. And we have been creating higher lows. So far, so good. But we would like to see higher highs also. That would increase the probabilities that we could see even higher levels in crypto here the upcoming months before we set the cycle high and then start the bear market. We can see some weekly seasonality here for Bitcoin. Well, this period here is typically red. You can see a lot of weeks here are most probably green, and this is where we are coming into October. And here in the beginning of September, it's most probably a bit red, and in my opinion, it would be really nice to create a manipulation to scare people out of their positions, and then we could be bullish and aim for higher levels. But let's have a look at the charts and I'll show you exactly what I think. So we had this weekly closure below this fair value gap, which is not good. It's a bearish sign. In my opinion, there is a nice point of interest here. I'm looking for, if we could just come down here, it would be nice to look for entries for longs. And there is some confluences here with the demand zone here. We see this is a demand zone that took out liquidity and then were created, which means this is a strong demand zone. The really weak sign would be now if we would just break this low, create a correction, and then break again. That would be very weak. But right now we focus on the trend we are having, and in the daily chart, we are seeing bearish order flow, a clear bearish order flow. Let's just respect it. And as long as we don't go above these supply zones and create a bullish order flow, let's just be bearish in the short run. And then if we get to this area, we can look for longs to even higher levels. And just to go above this supply zone doesn't mean we are bullish. We would like to see that we go above supply zones, create demand zones, respect demand zones, and then create even higher highs and higher lows. That increases the probabilities that we are building up some kind of low here. Overall in Bitcoin, if we check the monthly chart, you can just see this is August. It's red. And if you see last year, August was red. And then we had some green months after that. If we check August here, red, and then we had some green months. In this bull market, we have been seeing a red August. It's nothing strange. The special thing right now is that we are coming to the end in time. In time, we should be putting the cycle high for this bull market in the upcoming months before the end of 2025. It's really important to respect both the price perspective and the time perspective. If we are going to see higher levels, then we're running out of time. We should be seeing higher levels than the upcoming 2 to 3 months. If we don't see that, then the probabilities are very high that we actually have set the bull market cycle high, and we should be starting to think about the bear market. But we shouldn't be thinking about the bear market until this low is broken, in my opinion, because all these monthly lows have always been respected in the bull market. And if we go below like this, then the correction up is most probably a nice opportunity to sell, because the probabilities are then higher that we could see even lower levels. But for now, let's just focus on what we are having in front of us. Let's just don't go months ahead or something like that. Let's just focus on what do we have here. Well, the short-term trend is down. Let's just respect it and aim for lower levels until we see bullish order flow. And overall, we are bullish. We have a nice uptrend with higher highs and higher lows. Let's just respect that too. So in the short run, we can be bearish, but overall we can be bullish also. It always depends on your time frame. If we check Nasdaq, we can see here that we have a nice uptrend and we should be aiming for higher levels. But a really nice zone to look for entries for longs is this demand zone here. It would be really nice if we just could take out some liquidity, come down here, look for entries, and aim for even higher levels. The most important thing right now, I will check S&P 500 for you soon, but when we go inside S&P 500, you will see that in this chart, Nasdaq is creating a lower high, but S&P is creating a higher high. That is a sign of weakness. That is a divergence, a bearish divergence. If we see that in an uptrend, that increases the probabilities that we could see some further downside. But the divergence has to be confirmed. And if we have a divergence, let's say Nasdaq is like this and S&P like that, we confirm the divergence if we break this level, for example. We are then creating lower highs, and we would like to see lower lows also. And let's have a look at S&P 500 here. You can see in the same time frame, we are having a higher high, as I told you. So a nice point of interest here in S&P 500 is down here. That doesn't mean we need to come there, but it would be nice to see a bullish divergence in this case. For example, Nasdaq maybe takes out some liquidity and S&P doesn't do that. That creates a bullish divergence. Then we have Nasdaq maybe creating this type of structure, taking out the low, and then we have S&P 500 maybe creating a higher low. I'm not telling you that this is gonna happen. I'm telling you that if this happens, then that is a bullish sign to aim for even higher levels. So if we are seeing now a bearish divergence between the highs and then we are seeing a bullish divergence, what should we look for then? Should we look for bearish bias or bullish bias? We should in this case look for bullish bias because we are in a uptrend, all right? Simple as that. So I'm still bullish to S&P 500. I'm aiming for this black level, and I'm seeing this correction as an opportunity to aim for that level and even higher levels. But it's really important that we track the demand zones and the order flow we have here in the chart. That was basically it for this market outlook. If you liked it, hit the thumbs up, subscribe, leave a comment, and let's see you on the next market outlook. Bye.